Good morning, everybody. I don't know if they can hear me. Did they hear me yet?
Yeah, I think
Good
they
morning,
can.
everybody. There we go. What is going on, everybody? It is me, Tim, and this is the Investing Bros. We got a lot to break down in this show. Going to be a very special show for you guys today. T-Shroom is not here, but I am joined by the great Army Piper. But Bitcoin might actually have some good news today, as we're going to be looking at here in just a second. Later on in the show, we got Jerome Powell coming out to speak, but there are some interesting details about the inflation numbers that actually could be good news for Bitcoin. And the good news doesn't stop there. Ripple might have just scored the biggest win in their case if it comes the way we think it will via the Supreme Court. There's a couple other things to talk about here on Monday. It is the first show of the week, and we're going to be optimistic because there's actually a lot of reasons to be happy right now in crypto. Make sure you go ahead and smash that like button if you are excited for today's show. I'm going to throw it over. It's an empty room today. Usually I got someone sitting across from me. That side of the room is dark right now, but I am joined by Army Piper from Texas. How are you doing this morning, Army Piper?
Brother, I was told that by Texas law, I have to tell you I am doing better than I deserve, Tim.
Boom. Boom. We can't kill that part of the show. We do miss T-Shroom, who, in case you guys missed any of the shows last week, he talked about it almost daily, how he was going on a cruise and he could not wait. I'm interested to see if he has internet. He probably is going to tune in today just to give us some trouble. But make sure you guys go ahead and smash that like for T-Shroom. He'll be back next week. He's got a heck of a week, Piper. So he was telling me he literally will be on the cruise all week. Friday, they come back. He gets to sleep in his bed for a couple of hours before waking up early to go to drill this weekend because he is in the National Reserves. So he's got a fun week, but he'll be back with us next Monday, and it'll be a three-headed monster, a three-headed beast for the remainder of the Investing Bros. So it's gonna be really exciting. You know, I just realized though, Piper, without a T-Shroom, we have no quote of the day. Do you have a quote that you really like that you want to deem the quote of the day today?
Let's see here. Looking at quotes, I did not have one prepped. I should have done that. But I do have a personal quote. You ready? It's not how much you make, it's how much you keep.
So that's like the Benjamin Franklin, a penny saved is a penny earned type of deal. Although right now a penny is not really much of anything.
Well, it doesn't even have to be money. I mean, it can.
Yeah.
It can be. How many friends you make versus how many friends you keep. So.
True. Very, very true. Well, we're going to be moving on here. We're going to be jumping in probably with me and Piper running the show this week. Might see a lot more TA than normal. There's still a lot of news articles to cover. I'm going to give it a little tease here in just a second of what those are. But we learned from a mistake we made last week. And that mistake is if you do not engage with chat and read some of the names of the first commenters, the stream will crash. And I don't want to repeat that mistake. So let's go over here and let's see who is here this morning. You guys won't be able to see it. Maybe I'll take a picture and put it over in our Discord. I got a new setup. So I now have like different monitors. If you guys ever see my eyes looking this way, I'm looking at the charts. If you guys see my eyes looking this way, I'm watching and looking at chat, trying to engage with you guys. So I'm excited about my new setup. But our first comment of the day was a mellow fellow. He's on a streak, and not far behind was Mr. J. Eric Brubaker beat him to it, but Mr. J was third. But Mr. J, you're going to have to step up your game because you used to dominate this. Like I think one could say Mr. J used to be the Alabama of first commenters, but recently a mellow fellow coming in like the University of Georgia. Could we see a new dynasty starting to begin? Those of you who don't know what I'm talking about, it's college football. And that probably could spark a very heated debate for people down here in the South. But we got some other names here. Eric Brubaker, like I said, is in chat. Mr. J. Alton Henderson is here. Who else do we have? A lot of comments on the first couple group. Alex Green is here. Who else? Curtis Rorick, Eric Wallen, Mr. Bitcoin is here. Justin Eubank, CBD Suddy, Crypto Trades with the Buenos Dias Bros. Love all of our Spanish friends. I don't speak Spanish, but I love Spanish. I love the way it sounds. And someday I did take 2 years of Spanish in high school, and I think I've forgotten just about every single word that I learned. So I'm gonna have to update myself on that. Cryptex is also here with the blue name and the blue wrench.
Cryptex.
Shout out to Cryptex. Oh, there we go. Got the copycat. CBD Suddy is here. Who else do we have?
Suddy.
Brian D. Andy D. Servando Estrada. That's the one you got to get. Servando Estrada. Deep voice. Piper.
And sorry. Who was it?
You got to do this. Servando Estrada. You got to get the D. That's
Servando Estrada.
There we go. Crypto Set Guy with the wrench here. Just saying, Timmy. Thank you for that, Crypto Set Guy. Grand Roofing Incorporated, Z Canceling Radio. We had a couple more here, and then we'll jump in and get some teasing done, and then we'll move on with some technical analysis. Jabui 17, Oz 10 Games, Adria Aiden Vic, I would say probably Vic, even though it's a CH. Steve Shrum, so we got to have some Shrum here. If it's not T Shroom, it's got to be the senior. Thank you so much, Steve Shrum, for being here. Perlito 9mm, and the last one, Josh Denham. Thank you so much to everybody who is here. If I did not say your name, it's not because I don't love you. It's just because it is time to go ahead and jump into this great content. Let's start off.
But Tim, we have a super chat from Crypto SEC guy. Crypto Set Guy right there.
He just did that so that I would have to say something. His little
tactics. He wants you to say Ohio State football, Tim.
It comes out a little different than I think he wants me to say it. When I look at that sentence, I read is usually what I read that as.
I don't think that's how that's pronounced at all.
It's a close. It depends on where you're from. In the country and how you pronounce things. But thank you for the super chat there, Crypto Set Guy. By the way, speaking of college sports, I mean, I know it's not as popular, but Virginia Tech's women's basketball team just won the ACC yesterday. So you got to take your victories, your championships when you get them. It's been a long time coming for my Hokies when it comes to football. Maybe sometime again soon. But same thing for Ohio State football. Maybe someday they'll get back to winning the Big Ten away from Michigan. We'll see. We'll see how that goes. Let's go into some of these teaser stories that we're going to be covering in the second half hour. I told you no tea shroom here today, but we still got the tease shroom portion of the show. But we got a couple headlines that are very interesting. I kind of already talked to you guys about. We're going to talk about Jerome Powell. He's got a press conference, I believe, tomorrow and Wednesday. He's going to be talking a little bit more. But there's some data points about jobs and housing market that we're going to cover here at the second half of the show. Also, Nayib Bukele, the president of El Salvador, talks about how his country has actually been benefited from ever since they switched to Bitcoin being their legal tender. I don't want to tell you too much. We're going to talk about that and more. Ripple could have a major win if what we're reading about what the Supreme Court could decide is true. We'll talk about that more. And the last one is the demand for blockchain developers is continuing to increase, but it might not be from the people that you suspect. Make sure you guys stick around for the entire show. We're about to jump in and do some technical analysis. Right now, let's see. I think we got like 80, maybe 90 people watching. It's hard to tell with my computer. It kind of glitches up. We got a lot of people watching right now, but we only have 40 likes. Go ahead and smash that four-fingered mitten that's right below me. Like you guys are looking like right now, if you right here, there's a little mitten right there. And I think that Piper just put up another button. Go ahead and smash that one right now if you guys are excited. I'm happy to have Piper on the show today. So we're going to kind of tag team this TA. You can go ahead and go to my screen here, Army Piper, and we're going to talk about a lot here, starting off with Bitcoin. Now I'm zooming in here. A lot of lines going on in my chart. I'm going to break them down for you, I promise. The first thing, though, I do want to point out to you guys is that Bitcoin is sitting in a little bit of a falling wedge. And there's a lot to kind of unpack with Bitcoin's chart. I'm going to kind of address both. There's a bullish approach that we're going to have to take a look at, and there's a bearish approach. It is Monday, and we got a lot of good news coming. I'm going to start off with the more bullish approach, and we'll talk about that. And then as we move into more of a bearish approach, I'm going to get Piper's take on that as well, because there's lots of different figures you should be keeping your eyes on. But let's start off with a 4-hourly chart. First thing I'm going to mention, and you guys who have been following over the weekend probably know this, Bitcoin, after falling here back on the 2nd of March, got to a very boring place. And yes, depending on what chart you're looking at, had a couple wicks here kind of pop up. But as a whole, after dropping below this orange line, this level right here around 22,450, we've kind of been very suppressed. At the same time, though, we are respecting this rising level of support. And if I kind of zoom out here, even on the 4-hourly chart, you're going to notice this is a little bit of a formation. We call this a megaphone pattern. So sometimes you'll hear us talk about wedges. Sometimes you hear us talk about channels. A channel is if this line, if the resistance line and the support line were parallel, we would have ourselves a rising channel. For example, it's a descending channel. Ethereum's in a little bit of a descending trading channel. These two lines are parallel, but on Bitcoin, these are not parallel. When the lines are converging, so for example, Bitcoin right now on the smaller time frame, we're in a tertiary trend, is in a falling wedge pattern, and that's where the lines are kind of converging, coming close to each other. But a broadening wedge, or what we call a megaphone pattern, is starting to develop here, and we've seen this happen before, actually in a very, very similar circumstance. And I did see this earlier this morning on Twitter. I want to give a shout out. I don't think he's the one who created it, but I did see him post it. So shout out to Crypto Lifer, who made an observation on Twitter this morning asking, are we going to see history kind of repeat itself? Now, you might be wondering, Tim, what do you mean? What do you mean? Are we going to see history repeat itself? Let me hide my lines so we can just see that. Oh, if I hide my lines, I can't show you guys what I want to show you. Never mind. All right, I have to keep those lines there. Keep an eye on this right here. Remember, let's just kind of focus on what Bitcoin's done. We've had a big fall. We had a last level resistance. We fell to what is right now the bottom of the bear market. We then kind of moved sideways. We traded to the upside. We broke that former resistance level. We've used it as support, and we're heading to the upside. Now, a lot of people, I'm going to cover this in a more bearish category. Where could we go to the downside if the bears do take over? But right now, we're kind of focusing on, hey, let's think positively. Let's think bullish right now. What do we see happening right here that we've seen in the past? Let's kind of scroll back and go to the last bear market that we had back here in 2019. And oh my goodness, would you look at that? We've talked about other similarities before, but this is just one more of them. Now, don't get too excited. I'm going to offer this, and then I'm going to play devil's advocate with it as well and show you why it's still a little bit different. But I want to focus positively right now. Same kind of thing. This is back in the bear market we had in 2018, 2019. We had our last level of resistance. We fell down to what became the bottom of this bear market, down towards $3,100. We moved sideways. We broke through that level of former resistance, retested it as support, set ourselves up a megaphone pattern. And guess what ended up happening? We ended up rallying after coming back down to last level of support. We rallied 80%, 84%, we'll call it 85%, up all the way to 13,800 on Bitcoin. And yes, of course, we did end up falling back down, and we came back down to earth, eventually coming all the way back down to this former level of resistance, keeping it as support. This was our Black Swan event. That was the pandemic. I'm not really sure if we're allowed to say the C word yet. For a while, YouTube didn't like you saying it. I'm going to hold off for now, but I should probably look in to see if that word is now permitted without giving you strikes or YouTube going after you, especially with the new news that the former CEO of YouTube is now gone. Maybe the new CEO is not as particular about that. Anyway, this does not necessarily matter. What I'm kind of focusing on here is this megaphone pattern back in 2019 that shot us up all the way this high. I do not think that Bitcoin's going to shoot 84% up from where it currently is. Let's go back and take a look. Oop, did not mean to hit that one. Let's go back and take a look at where we currently are. Just if history were to repeat itself perfectly, and there's, again, a couple reasons why we aren't doing it right now, but let's just pretend for a second that Bitcoin could do what we're kind of talking about. Let's go down from where we currently are. 84%, in case you guys are wondering, right there, would be all the way up towards 41, and I guess technically towards 85%. We're going to look at 41.2. I'm going to kind of pause right there, let you guys kind of chew on that information. Do you think that Bitcoin is about to run up to 41,000 with everything we have going on? And yes, we're going to cover some news that potentially Jerome Powell and the Fed might be giving a more dovish response than some people are predicting. We'll talk about that later on in the show. That being said, would it be enough to send us all the way up towards this? Just to keep in mind, not only do we have a couple different levels of resistance above our heads, like the 25.2 that we cannot break through, we then also have this nice little fat level around 28,000, 30,000, but that's a former level of net resistance. Can we break through that? Then you're starting to talk about the $33,000, $35,000 level, still firm resistance. Can we break through that? And then bumping all the way up to 41, 42. Is it possible? Absolutely, it could be possible, but is it likely? Not so much. Let me kind of now, as we finishing up the more bullish side of Bitcoin, let me continue to put a fire hose on this and douse it and let you realize, hey, as cool as this is looking right now, it's not necessarily everything it could be cracked up to be. Let's come back over here to the 2018-2019 bear market. Let's do some Fibonacci. Let's just even talk about this. Now, here's the thing. We're on the linear chart right now. If you go to the all-time high we had back in December of 17, you come down to the bottom, what the bear market bottom of December of 2018 looks like. We ended up rallying. This rally pushed us all the way back up into the golden pocket. All right. Now, here's some things I want you to kind of pay attention to right here. And I'm going to kind of go back and forth. But notice even this megaphone pattern, look at where it broke. It's breaking right between above the 0.236, right below the 0.382. So this megaphone pattern happens here. This is important to detail because it's not just that it happened above this resistance level. It's also that it's happening here on Fibonacci, what gave us support to run all the way up to this golden pocket. This is where Bitcoin currently is very different than what it was back then. Let's pull up our Fibonacci to the all-time highs of 2021, November of 2021, and let's go all the way down to what is currently the bottom that we had back here in November of 2022. So you're going to notice in this red box, that's where our 0.236 is. Rather than back in 2018, 2019, where this megaphone pattern developed within the 0.236 to 0.382, this one is developing beneath the 0.236 level. That's the first thing that I'm kind of looking at and saying, all right, I don't think we're going to repeat it. Also, golden pocket, we're sitting at golden pocket up towards $48,000, $50,000 level. I will say, I've seen a lot of analysts talk about a potential $48,000, $49,000 Bitcoin price by the end of the year. More than likely, this is one of the things they are looking at. Maybe that could happen. My point here, though, is if we're thinking history is going to repeat itself like it did over here, not so much. I do not see us running back up to the golden pocket, hitting close to $50,000 on Bitcoin anytime soon. If that happens, more realistically, we're talking about best case scenario end of 2023. More realistically, Q1, Q2, maybe even sneaking into Q3 of 2024. My point here, though, is look at the differences. While there are similarities, this chart is very different. We are nowhere near in this little rally as bullish as we were back here in 2018, 2019. So again, wanted to start with a little bit of a bullish push there, give you guys some hope. There is some things repeating themselves. But best case scenario, I think if we end up moving, let's say similar, and we end up going to the upside, just like we did back here in 2019, I think looking at that 0.236 level instead of the golden pocket is the better one. And guess what? That puts us at 28,000. That is a level that just a couple of weeks ago we were talking about very heavily. If the bulls could continue to hold up, it could shoot back up to that point. So this, in my opinion, over the next couple of weeks, best case scenario, we see a $28,000 Bitcoin price. And I want to kind of pause right there. And we're going to go back. And I told you guys, there's some bearish things I'm looking at on the Bitcoin chart. It is Monday, so we had a whole weekend of not getting to show any TA. So we got a lot to cover here. But Army Piper, I want to kind of throw it to you for just a second. And we're going to cover some chart prime here a little bit. But what I was breaking down right there, what are your initial thoughts when you're looking at that bear market of 2019? You're looking at today's bear market. Do you see similarities? Do you agree that it's like, man, there's some there, but there's also still a lot of differences? It's too early to count your chickens.
Absolutely. I am seeing a couple of things here. Let me just jump over to my chart here. By the way, you guys just got to see for the first time, that was BroCam. It's going to be a new feature here on the show. Yeah, BroCam. Gotta love BroCam. So taking a look at Bitcoin here on the 12-hour chart right now, you can see this is that one that I super chatted last week when we were breaking that 12-hour trend line. Right now, we're kind of just holding in this pattern just above our delta here, which is coinciding right along with the dynamic reactor right now. We are continuing a nice little trend downward on the oscillator here, but we're starting to get into that bullish zone down here on the oscillator. So I'm going to be curious to see what happens down there. We did get our little uptrend arrow here, which we previously had. And that uptrend arrow, the last time that we got that, which would be here, that gave us 6% upside almost. So if we was to do that, it might be enough to actually push it up to retest this trend line. Because we didn't actually get a good retest on this trend line at all. So I'm watching for those support levels, but I do have something that's very concerning that I'm seeing here. Let me go over to chart patterns here and turn these off so you can see what I'm seeing here. We have a rising channel that we had broken out of also, and you can see here on the chart prime patterns that we got the confirmed X there for the breakout. This is actually giving us a target of 18,800 on the breakout point for this. And if we go and we turn over the CME gap, Bam, there you go. So this is pretty bearish to me right now when I'm seeing this pattern play out. And a lot of times these chart patterns that auto print, they come out to be very accurate. Also, I do have my local fib on here, and if you want to see where this comes from and to, because people like to know the source on this stuff sometimes, this is coming from the last time that we had the big run up here after the big drop that we had back starting from June of last year, and then August, right after we got that FTX news. Started that drop down there. And if you look at that down to the lowest point, we are currently sitting in right above the golden pocket. And you can see that last time we touched it, we got good support there. So I'm curious to see if we break through this golden pocket or not. But if we do make it down to that target, it would be the 382 on my end from what I'm looking at here. So I'm thinking that we might see that $19,000 range just because of the liquidity that's in the CME gap down here and because of the fact that we do have this breakdown target on the auto chart patterns. So
yeah.
One more thing that I want to check here. We do have our predictive ranges, but I want to check and see what we're going to look at with the multi-time frame support resistance indicator, because I think that we might have some pretty good daily and 12-hour support down in that range also. So let me turn off those fibs. There we go. And let's get on that. Let's see here. So you can see right now we did get our rejection off of the upper gold trade band by the way of the predictive ranges. And right now we are above that delta, but that target would also be down here on that gold line that I was just showing you. So yeah, if you look here, we do have right at that target. We do have a 12-hour major support. It's a number 2 on the multi-time frame graded. So we do have that and a daily down here at 17.6. So this breakdown target does have a lot of support in this range and does cover the CME gap. I'm thinking that looks pretty good target for me on this downside of this chart pattern, auto chart pattern. But again, if you look at the predictive ranges, I told you we typically trade between these 2 gold bands, and look where that's going to be coming in at right there with that target, breakdown target of the pattern. So that's what I'm seeing. Yep. I'm not sure. I mean, do you want to call it bullish or bearish? I would think it's bearish, but I'm bullish on it going that low because I need some more DCA opportunities. So.
We talked about this last week. Technically speaking, when we say bearish, we're talking about price going down, bullish price going up. But sometimes, price going down could be the most bullish thing possible for your portfolio because that means you get to gobble up cheap Bitcoin. I want to kind of break down some of the things that Piper was just talking about there and go into a little more detail because this is actually a really cool opportunity. Some of you guys over on our Discord, our Investing Bros Discord, got to watch me and Army Piper go back and forth. There's a lot of key levels. The question is, when do these levels get hit? That's one of the cool things about technical analysis is that you can use a lot of different indicators and packages to say, all right, this level, this level, this level, this level. That is about fitting the pieces of when, how, where. And so right now I want to I put out a cryptic tweet over the weekend. I said, I put some numbers out on Bitcoin prices. I'm going to kind of break those down. So the first thing that I'm going to talk about, the first level that I think is going to be very significant is going to be 22,700 to 800. I have it highlighted right here by this golden pocket right here. This is former support. I talked about it earlier in the show. We're kind of in a tertiary bear trend right now on Bitcoin. What do I mean? Ever since we last hit our 25.2 back here on the 21st of February, we started setting lower highs, lower lows. This is a downtrend. And traditionally, while we did kind of break the rule, we broke up above the former support. We had some wicks go above. Usually when you're looking at this, seeing the last level of support in this trend be turned into resistance is very strong. So look at these wicks. We have 2 lower wicks here. This is the Bitcoin index chart. So it's kind of taking a lot of information. This isn't one exchange. It's kind of looking at a lot of exchanges and taking all the information in. We had 2 wicks come down here as low as 22,759. We had another one come up here around 22,876. So I just went ahead and put a zone here. Watch this zone be significant. So I'm going to come back to that here in just a second. Here's something that also is very important, is 21.5. Now, Piper's talked about this level. There's lots of things on Chart Prime calling for and saying there's significance to this level of 21.5. That's really important. The other one is there's a very significant level here at 23.1, 23.2. There's a lot of things going on here. And then at the end, like he just mentioned, there's also significance all the way down towards 18,000, 18.4. So now it begs the question. All right, I told you guys we covered the kind of the bullish narrative. There is a bearish narrative, and both of these could happen. I'm, to be honest, leaning a little bit more towards the bearish scenario, and let me kind of paint a picture for you. So let's go back to these levels again: 22.8, 23.2, 21.5, and then you get bearish, and you say 20. What do we say? 18,000, 18.4, somewhere down here. I'll go ahead and put like a little box. Let's go. I said 18. Let me go. Oh, that's good enough. Good enough for government work. Let's go right here. All right. So watch this little box right here potentially be important later. Now, like we talked about before, we're in a falling wedge pattern. Last touch, we came back down and touched our support levels. Traditionally, you kind of ping pong back and forth between the support and resistance. This level right here, if I didn't even have the falling wedge pattern, I would still think this was a significant level because of these former support levels. But notice as we've kind of dragged out sideways, and if I were to pull up the volume, we've done so with pretty much no volume whatsoever after the big dip. Very low volume. Yes, we had a little bit come in here earlier this morning, late last night, but as a whole, not a whole lot of volume. What I'm kind of anticipating, and this is not financial advice, this is not saying Tim saying this is perfectly going to happen, but I think this would make a lot of sense. Let me start drawing some predictive movements for Bitcoin to hit these different points. We kind of make our way over here. We come to resistance level, both the falling level of resistance and this flat level of resistance at 22,800 or so. And then we keel over and we start to make our way back down. We break through this blue support level that was that megaphone pattern. And we come all the way back down towards 21.5. And let me actually kind of play with this a little bit differently. I'm just gonna make some clean lines on it. And we come back down and touch at the support level of this falling wedge pattern. Now, falling wedge patterns traditionally break bullish. I don't think we're going to get all the way up to where it's predicting, which I think is a little closer towards 24,000. But I do think that we could make a bullish breakout, come up all the way to what? That significant level of 23,100, 23,200, which is a level that he's talking about very heavily. Now, I do think we potentially maybe break a little through it, and then we kind of keel over. Let's take a pause right there, and let's zoom out and just take a little bit of a look. So this kind of answered three different significant levels: our 22.8, our 21.5, and then our 23.2. All three of these could be hit. And this is just a pretend sketch. Don't look at this and say, oh, that's the timeline that's going to happen, so let me try to trade this right here. No, I'm just making some hypothetical predictions on what price could do. However, if this is what we had, this is what we were kind of unpacking on the Investing Bros Discord last week. Is this ugly? Yes, it's ugly. But if you see what I see, left shoulder, head, and then this movement, especially if we drag this out a little bit longer, right shoulder. All right? Is it the most beautiful head and shoulders pattern you've ever seen? No, but rarely do you see very pretty head and shoulders pattern. They're usually ugly looking like this. Now you're starting to look and say, uh-oh, we just had a massive bearish looking formation just formed. Let's take a look at what this would mean. Okay, well, guess what? Assuming we come down and touch this, this would put our neckline right down here. Oh, I cannot grab this line. There we go. This would put our neckline right here at 21.5. Let me go and delete this right shoulder drawing. Let's just say that this were to play out like this. All right, so we come out here, we'll go a little wider, but then we start to break down here. We bounce, and then we break through. All right, so we have our breakthrough. Traditionally, when you're looking at head and shoulders patterns, what you do is you go, come on now, chart, work with me here. Go back to my arrow. There we go. All right, what you do is you go to the top of the head down to the neckline. All right, let's kind of map this out. Boom, top of the head, down to our neckline. You extrapolate this over to the breakout point. Let's just say it's right here. I'm not giving you an official date, but this date right here is April. All right, that kind of goes in line with things we talked about. There could be a big dip coming end of quarter one, early quarter two. Where would this predict we go down to? Oh my goodness. Right below, right close to this little golden pocket. Remember we talked about that 1800, 18.4 region? Now, inverse head and shoulders patterns, they don't always go perfectly. What you're looking for when you see a breakout is what in that area is significant support, significant resistance. In this case, it is this $18,000 price. I'm not saying this is perfect. I'm not saying with 100% certainty this is going to happen. However, as a technical analyst, you're looking at all these levels. You're looking at 22.8. You're looking at 21.5. You're looking at 23.2. You're looking at 18,000. You're saying, oh my goodness, all of these have significance when I'm looking at the chart. And so this is a great example using traditional technical analysis, how all of these predictions could absolutely come true. We get a little bit of a fake out first. Here in the next couple of days, we get some bullish momentum that allows there to almost become a bull trap up to 22,800. All right. Retail investors get trapped out. The price falls all the way back to support at 21.5. Here, the bears are starting to pick up some steam. They think they have some momentum. Retail's freaking out. They want to sell all their Bitcoin. Well, guess what? Now the manipulative whales, they buy up, setting the price all the way back up to 23.2, which guess what? Breaks this streak of lower highs, and this gives the bulls a little bit of strength, thinking, all right, here we go. We're heading back up to 25,000. Well, boom, there's a bull trap again. The truth is, the inflation's not under control. They're going to have to raise interest rates longer. I'll talk about that here in just a second. And this brings a massive bear moment to the whole entire rally. We come down, we freak out, we go all the way down here. We fill our CME gap, which by the way is sitting at 19.5. We come down here, all the bears are feeling strong, retail's freaking out and flooding out. And guess what? All these institutions and whales who've been holding for a long time, they are just foaming at the mouth looking at an $18,000 Bitcoin again that some didn't think would happen, and they're gobbling up Bitcoin once again, and then it's off to the races down the road. This is a very likely potential price prediction for Bitcoin in terms of its movements. It would make a lot of sense. It would obey the rules of a lot of technical analysis and would be a one way to kind of see all of this stuff unfold and unbreak. Let me know in the comments what you guys think. It's 9:31. I told you guys we're going to be doing a lot more technical analysis today than normal, so we're not going to finish, but I do want to get your guys' take. What do you think about that prediction? Piper, what do you think about that prediction? I know we talked about that on the Discord. What are your thoughts?
I'm actually seeing that that could be very likely for that level that you're talking about there at that Head and Shoulders, because I went ahead and dropped it over to a 4 hour just to see what the patterns were looking like there.
Yeah.
And you can see that we have a breakout at the breakout target. And again, check this out. Here we go. At the bottom of the CME gap.
Yeah. Yep.
So I definitely think that it's possible that we're going to be heading down to that range. You can't. The Head and Shoulders might be a little exaggerated there, but we have to look at every scenario. We have to look at every angle, right? So, I mean, someone in the chat was saying that nice imagination, but let's go, right? You have to look at everything from every angle in order to get the most solid information. Is it going to happen? No. Is it guaranteed to happen? No. I mean, it's technical analysis. No. But you can't negotiate with the charts. If you see something that's there, you've got to point it out. You got to call it, and it's got to have the likelihood. Like when I first did the FOMC thing last time on here, we were talking about this is likely the range, but these are the extreme ranges, right? That Head and Shoulders scenario is the extreme analysis that we can look at right now. So.
And I think another thing, I'm not suggesting anyone look at what I just drew and then trade all of those levels. First of all, that would be very foolish. And I'm not saying that's 100% going to happen. But what you see a lot of people do is, like right now, I think there's going to be a lot of bears predicting an $18,000 Bitcoin. And some of you are going to be tempted to maybe agree. You're going to see, even when we're moving to the downside, you're going to be like, oh, here it comes. But here's the problem, especially when you make a level of prediction, that is still a $4,500 drop in the Bitcoin price from where we currently are, $4,400 drop. That's huge. It's not going to happen overnight, and there's going to be fake outs along the way. So even if it doesn't happen exactly like what I just said, those are the types of things the markets will do. If Bitcoin was headed down to 18,000, it's going to make confusing moves like what I just drew. And that's just me kind of playing the future of the charts, kind of trying to make sense of what is developing currently, because there is a mixed bag. There are indicators calling bullish. There are indicators calling bearish. Something completely different could happen. That first scenario we laid out in the show with the broadening wedge, with this megaphone pattern and a shot up to $40,000 for Bitcoin, that could happen. Is it likely? No. Do I think it's going to happen? No. Am I going to enter a trade waiting for that to happen? I am not. If you want to, feel free to do so. However, this is all about helping you guys understand, see the chart, understand formations, understand indicators, understand significance to the support and resistance levels, and try to piece together your trading and investing journey the best you can on an individual basis. I want to kind of flip and switch into some other stuff right now. I kind of teased at it, but this is going to be really, really, really important. Let's go over here, back to my screen, Piper. This is the CME futures prediction. So we got 16 days here until Jerome Powell speaks again. We get another number. Well, he speaks tomorrow. 16 days until the FOMC meeting where he gives another level of interest rate hikes. Right now, even though it creeped back up to 30% for a 50, I think as we get closer and closer, this 25 is locked in. I don't think that Jerome Powell and the Fed think they need to go any higher than 25 basis points, but things have gotten a little interesting. Here is why I think that when we got to 25.2, everyone was still anticipating. There was a prediction that back in November, sorry, not back in November, in the future November, we would have our first interest rate cut, that the Fed would pivot by the end of 2023. And this gave a lot of investors hope that the economy and that the bullishness would come back sooner rather than later. That all shifted. So what we're looking at right now, 25 basis points in March, another 25 basis points more than likely here in May, so it's 61% certainty. June, another 25 basis point increase up to 525 to 550 with certainty. July, finally, after a long time, we get a pause, not a flip, a pause. But even right now, there's not a lot of certainty on that. There's a chance, not far behind, 35% are still saying another 25 up to 575 in July. September, we're still saying, all right, there's a chance we're still sitting up there. November, the high probability is sticking at 525, 550. We're still paused. December, we're still paused. They're now coming in saying January of 2024. It is stupid close, 30%, 30.6% to 30.2%, almost tied neck for neck. But this is the first time, 5 to 525. January right now is the first time they're predicting that we could actually see cuts. If we move forward to March of 2020, they're saying, hey, we might cut once and then pause. May, let's see here, we cut one more time down to 475 to 5. So what we're looking at right now is a lot of these people kind of trying to make a prediction about what the Fed is doing, is saying, guess what? 2023, they're going to keep raising rates and they're going to keep them high. It's not until 24 that they're going to start slowly changing direction. And those of you guys who've been watching this show and other shows for a while know that while a lot of us are going to have a breath of fresh air, we're going to say, oh, thank you, Lee, the interest rates are coming down. Traditionally, stock markets actually end up dipping when we have a pivot from the Fed. So this is going to become a very, very interesting year. If you guys are ever tired of us talking about FOMC, I'm sorry, but it is probably the single most important detail about what Bitcoin and crypto and stocks are going to do. And there's a lot to unpack. So stay with us as we cover this throughout. You'll hear us talking about this weekly for sure, and it's going to be the biggest impact on what Bitcoin is doing. Piper, before we transition and we kind of go into some stories over here, and we might do some TA later on the show if we have time, what are your thoughts about this, just interest rate hikes in general? What is your thoughts about where we're sitting at right now? Do you think that there is a chance that we actually do get some dovish response from Jerome Powell, or are you more concerned about the rest of 2023?
I'm very concerned about the next 2 weeks. I'll just call a short target here. We've got Jerome Powell, which we're going to talk about here in a bit, but he's got two meetings this week, interviews this week with the House and the Senate. Tomorrow is the Senate, and then the House is on Wednesday. So those two meetings that he's having with them, we could hear anything out of that. I am very sure that the House and the Senate are going to ask him about March 22nd's rate hike level. If we get any indication that comes out and it says 50%, or he says it's going to be 25, but we are now considering longer, more, higher, any of those words, we could see a nasty dump in the markets. And then we've also got CPI data coming out on the 14th, which is about a week from now. We've got job numbers coming out this Friday. So like the next 2 weeks, there are a plethora of events that could be causing the market dump on any one of them. And if they all come out hawkish, then we could see hardcore dumping with a lot of people selling off. So
yeah, and I think that's a good transition. Let's talk about the title even today's video. There's actually some good news, and it's not just on the charts that we talked about earlier, that potential that we're rallying up higher, but this is kind of transitioning us into, we've been operating over the last couple of weeks that Jerome Powell is going to be more hawkish, that the reports, we saw inflation printing higher than what we were anticipating. We're sitting here wondering, is inflation starting to flip back and getting out of control? But there was a report done today, and I'm going to throw it over to Piper because he found this article. Let him break it down, and we'll discuss it, that actually we could see Jerome Powell be staying a little dovish, bringing some maybe bullish pressure back to the space. Piper, go ahead and break down. What are we seeing? This is a Yahoo article. What are you seeing in this that is really, really important?
So a couple of things that I'm seeing here. So they talked about the jobs reports, Powell testifying, which we just talked about, and a lot of the events that are coming up this week. But primarily, so on Friday, we're going to get the jobs reports, and it's expected to show 200,000 jobs were created last month. Now, keep in mind, in January, we had 517,000 jobs that were added, right? So this is 317,000 jobs less, and that was a big factor for Jerome Powell. He was talking about the number of jobs created. It was showing that there was not a lot of pain. So if we look at how this normally works, if there's a lot of jobs created, then it says, hey, we're not affecting the economy. We can go ahead and increase the rate hikes. But if we have 317,000 less jobs this week, it could push Jerome Powell into a corner where he can't do higher than 25 basis points, because now we've shown a massive decrease within a 30-day period of jobs created. So there is that. But I do want to touch on that. Well, firstly, the unemployment rate that's coming out Friday, they're expecting it to be at 3.4%, which will be steady. But what's interesting is that this economist from Bank of America, he said that they suspect that some of January's strong numbers of 517,000 jobs was actually due to just a lot of noise and due to unseasonably warm weather, allowing people to work longer in some of the regions of the U.S. But he believes that the jobs were actually closer to 350,000 if they hadn't had that that abnormal weather pattern going on. So, a little bullish, a little bearish info coming in on the jobs, but I do think that if we come in at the estimated 200,000 jobs, that I do believe that Jerome Powell is going to have to take, pause for effect on that rate hike being 50% or 50 basis points. I mean, and be stuck with that 25 basis points. So, wage growth is another thing that they're looking at, and they actually said that the average hourly earnings are expected to rise by 0.3%, which would be over month, and then 4.7% from last year. But the one thing that I noticed in here was that investors are watching Jerome Powell, which we just talked about, and he's going to have this Tuesday and Wednesday morning meeting. And they do say in here that they expect that he's going to be asked about the 2% objective target for the to get the inflation rate to, and that he will be asked about what this next March 22 looks like. Now, we were talking about this, and I want to put this out, and then you and I can discuss this, because they're talking about the housing prices. One of the sticking points on inflation has been housing and energy costs. Well, we know energy cost is seasonal. As the winter starts to warm up here into spring, we're going to see the energy costs come down. But what about the housing cost? Because one of the things that we're seeing here is you got to remember, March of last year is about the peak of everything that we had on inflation. It was in that window of the peak. So the housing numbers that we're seeing for demand and price increase, the inflation number for housing, those people are locked in. We can't get a month to month on this because people are locked into leases. And so it is very likely that as some of these leases come in, that they won't be able to raise it, because when they were locked in to where it was unlocked for a new lease, the prices have gone up and come back down. So it's unreasonable for them. But you've got some people that may have been showing higher inflation cost on housing that now that it's in line could be coming down. So we could get this cross vector of the cost of housing not being where it should be, because now it's come down on inflation and now the new leases don't have that high amount. Or you could see, because the demand has lessened, that people have to lower their prices on housing in order to get people in, because everyone's like, no, I'm going to stay and live at home with mom. I'm not going to rent an apartment. So this is all coming to a head, and I don't know how it's going to play out. But I mean, I think it's worthy of a little couple minute discussion here. What do you think?
Yeah, kind of breaking down a couple of things. The job, when it comes to the job report details, I didn't love that part of the article, because it says in a Bank of America economist is saying, oh, well, I think that, like, you never know what economists,
you can trust
numbers
banks.
they're working with.
You can trust banks.
At the end of the day, the fact that we have 200,000 new jobs, even though, oh, there we go, new sound effects too. even though 200,000 is lower than 517, that still shows a sign that the economy is still growing. And, I think numbers way lower than that, you're starting to see concerns, but 200,000 jobs created. What those jobs are, again, we could probably go into a lot of details about fudging numbers to get 200,000 jobs, but that doesn't matter to Jerome Powell and the Fed. What matters to them is that number they get to justify with how they move interest rates. So I'm not too concerned when it comes to the job report. I think, again, that's going to be a little bit more of a bullish scenario. I'm confused about this housing portion, though, Piper, and because you and I talked about this before. It talks about lease prices of people being locked in and they're about to get unlocked. Now, traditionally, like you and I said, how frequently do we see rental prices drop? That's very rare. So you would think that this is a little more of a bearish thing. You would think what it would be saying is, wait until these leases end, and then homeowners could raise prices on their tenants, and the tenants are gonna have to pay more, and it's gonna be a problem. But no, what this article is saying is, hey, after last year's prices, they were really high, demand was really high, it allowed rent to be really high. Watch this be unlocked, and what it's kind of insinuating is demand is not there anymore, and landlords will be forced to drop their prices.
Right.
We're gonna have to kind of see this actually happen before we can count it as a benefit, but that is what this article is getting at, which should be bullish. And if you go over, let me see, I'm going to try to zoom in here the best I can. If you go over to my screen, this is that chart that when he was scrolling through, we were looking at here. We have this blue line here, services, energies, and housing. What the article kind of talks about is how it's moving sideways now. It's not growing, but it's not really getting killed either. It's the food, beverages, and energy that's had a big decline. The housing service is continuing to skyrocket. So for some reason, it's saying that it is anticipating this little line right here. I can't draw on it, but it's anticipating it to keel over and start coming to the downside, which, if that does happen, that is bullish. When we made the title of this video, when we talked about how they could have some good news for Bitcoin, if we see housing actually keel over and come to the downside, that is one of the biggest numbers for inflation. Just like we said, we're seeing food already go down. We're seeing services and energy and housing, this blue line, it's not going down, but it's not growing up anymore. If we can get this black line right here to keel over and come down, it's one of those things like, hey, could we get into the details and find out this is all a bunch of fluff and this is just the media trying to feed us information to make us happy? Yeah, that probably is what it is, but it would cause Jerome Powell and the Fed to say, guys, look at how good of a job we're doing. We're tackling inflation. Inflation numbers are going down. And whether that's true or not, they're going to keep those interest rates low, which will allow people to continue to put their money over into things like Bitcoin, into crypto, into stocks, and let those prices rise. So all of your holdings, all of your bags will increase. Now, are they increasing on probably fake, stupid information? Possibly. Possibly they are. But we're not, we talked about this last week. We're not really trading a world of reality. We're trading a world of what are we being fed with the information? And that's how you kind of operate here. That's how you have to invest. Just because you disagree with numbers being reported doesn't mean you shouldn't trade based off of them. What are your thoughts about that, Piper?
Yeah, I can agree with that. At the end of the day, when the data comes out for the numbers, Jerome Powell is going to put out his decision with the entire Fed. They're going to either go 25 or 50. I think it's going to stay that way for a while. We're going to have that threat of 50 always on the horizon until these inflation numbers get down. I try to explain it to people all the time that, if inflation numbers are way up high on a mountain, they have to raise the rates to get up to the level of inflation so they can kumbaya, hold hands, and come back down the mountain together. So until that happens, that's what we're looking at. So, but, this week, maybe tomorrow, maybe Wednesday, we'll hear some information come out and see what's going to happen with that. So,
yeah, we'll continue to unpack that as it comes out. But let's keep moving on. And I told you guys, a lot of good news, positive stories today. Let's keep moving over here. Go back to my screen, Piper. This is an article from Watcher.guru, which, by the way, on Twitter, if you guys are not following Watcher.guru, you need to. They break very, very important information. You definitely a Twitter follow I recommend on top of my own T-Shrooms and Army Pipers. But here we go. Bitcoin, making Bitcoin a legal tender increased tourism by 95%, says Nayib Bukele. I'm not going to go in and read every single part of this. If you guys go follow them, you can read more. But this is really good story. We kind of had stopped hearing about Nayib Bukele. We kind of stopped hearing about what was happening down in El Salvador, especially with the dropping in price of crypto, of Bitcoin. And of course, a lot of people wanted to say, oh, look at how much of a mistake he made. He crashed his economy. This is huge. If what he's saying is true, if this is true that 95% increase to tourism has happened, that alone right there is a big, big deal for the economy of El Salvador. He goes into this article. He just talks about how ever since he's done this, the friendliness, the people who love Bitcoin wanting to come and spend that money there. Maybe that was his plan all along. What are your thoughts, Piper? What is your thoughts about this story in general and about Nayib Bukele?
So when you got a country, your entire goal is to bring in money from outside, right? You don't want you don't want all your money to be based inside, because then it's just recycling your currency. So I absolutely could see them doing, hey, well, let's make this a big tourist destination, get everyone to come in here and bring money from outside, from other GDPs into our GDP. So, I mean, it could have been his intent the whole time. So you never know. I mean, at the end of the day, at the end of the day, national security, economy is national security, and maybe he was just looking at it from that level. So,
and listen, they'll benefit when Bitcoin does go back up. They will love that. But a 95% increase to tourism, most countries will take that. We'll take that very, very easily, almost double it. Let's keep going on with some more good news. This one for Ripple, and I don't know who all saw this morning, but Ripple cites Supreme Court ruling in the ongoing legal battle with the SEC. Kind of moving on down here. I don't have the cool indicator. I got to get the highlighter tool that sometimes T-Shroom and Piper use, but I'm going to just read this paragraph right here. Recently, Ripple filed a letter in line with a Supreme Court case that supported the blockchain company's fair notice defense. The letter argues that the federal law must provide clear guidelines on what is prohibited, and highlights recent rulings that constrains the U.S. government's power to impose penalties on American taxpayers who fail to disclose their offshore bank accounts. Ripple asserts that this ruling supports its contention that the SEC failed to give adequate fair warning regarding the legality of XRP, which has negatively impacted investors and the broader cryptocurrency industry. What's kind of cool here, so U.S. District Judge Annalisa Torres. She's the one people are going to be watching her name and seeing what she says. So far, it is looking like she is leaning in the direction of Ripple. And pretty much the case here is saying the SEC did not warn Ripple and XRP with enough time to say, hey, what you're doing is illegal, what you're doing is security. And if this holds up, this could be the deciding factor in this lawsuit, that the SEC would lose because they did not give warning. And I thought about this, Piper, and you can go back to our bro cam now. What I was thinking about this morning, and you and I were talking about it before the stream, have we not in the last 2-3 weeks seen just a ridiculous amount of accusations by the SEC accusing exchanges and coins of being securities? And it made me kind of think, has this news actually been something in the works for the last couple of weeks? And Gary Gensler and his whole group at the SEC is realizing, oh my gosh, we're going to lose this Ripple case because we just weren't warning people. Let's just go ahead and go on a little spree and warn everybody that they're a security. That way, we would never lose a court case on this decision ever again.
And it's very, very possible. And I do find the timing extremely ironic that, hey, we may lose one of the biggest cases that we have going right now in the spotlight. We need to make sure that we don't lose all of them after this. But it's very possible too that Gary Gensler is trying to show proactiveness because his job's on the line at the end of the day. So I don't think Gary Gensler will be at the SEC by the end of this year. So.
Yeah, that's what I'm kind of hearing. Those rumors are kind of churning more and more that other people are, even with inside the SEC, are not happy with him. He might be being pushed out here very soon. But again, big win in my opinion. This is a big win for Ripple, big win for crypto. There we go. With the applause. Wow, that's a long applause. Let me know in chat, what do you guys think here? Matt C just said that's an interesting angle. Front run the case. Yeah, I mean that's kind of what I'm looking at. This timeline. Like I think he thinks he's going to lose the. I think he's going to always come out and say he feels good about it. I think in this article, or there was a different article we were reading, it said the SEC still feels very strongly about their case, but I don't know. The timeline and the recent actions kind of say different. Let's move on to another story. Now, this one I would say bullish for the entire crypto space in general, but this was over by Decrypt. You guys know this is one of T-Shroom's favorite crypto channel. What do you call this? A news channel out there. Anyway, demand for the blockchain devs is soaring, but not just in crypto. It says despite recent crypto layoffs, prospects for blockchain developers may be set to hold strong according to some of the hiring industry. This article, very long. You guys can go. I might put this over in our Discord so you guys can scroll on this and read about it. However, it goes into detail that obviously you're going to see cryptocurrencies and exchanges still wanting to hire developers. But what's increasing is actually the banks are hiring developers, and these companies like Google and Microsoft, they're hiring developers. Blockchain technology is taking over by storm. And we can go ahead and go off my page here, Piper. Blockchain technology is not going anywhere. I've seen this all over the space. In fact, even my more recent boss, I had a long conversation with him where he talked about he believed in blockchain technology, did not like crypto, but he just said that he thinks that current technology is better than blockchain. That is not what these companies and these banks are saying. Yes, they are afraid of it. Yes, they realize that the monetary side of cryptocurrency could completely destroy the current financial system, that being fiat. However, they're realizing, man, we're not going to be able to kill it. At least if we can start adopting it and using it, we can continue to compete in the space. Piper, what are your thoughts about this, about devs coming into all these other industries?
I think that I think we're going to see that, especially once we do get some smart regulation. I think once there's regulation out there and people know how they can operate to the left and right of their parameters, that we're going to see the institutional adoption of the blockchain technology even more. At this point, everyone's afraid to touch it that is in any type of institutional setting, because they don't know if they're going to get their hands smacked, right? So do we get in with this or do we not? So I think that it's here to stay. The technology is here to stay. I just think that they need to know what their levels of operation are within that field of the technology. So.
Well, and I think another really cool thing about all of this too is this is why when you see the stories and the partnerships of Matic and everything they're doing, why am I so bullish on Matic? Why do I think Matic could have a really special bull run here in 2024, 2025, maybe end of 2023? It's because look at all these partnerships and piece together what's going to have to happen as we're seeing all of these banks and all of these companies hiring these blockchain developers. They want to get their business blockchain accessible. They're still going to have to pair themselves with a very high functioning, high running, fast cryptocurrency that allows them to transact and move quickly. And at the moment, Matic is one of the front runners. And of course, Matic being tied to Ethereum, that's a great thing for the Ethereum train. When you look at some of the things that Cardano is really building on to create more access for different people. By the way, there's a huge thing about Cardano now has wrapped Bitcoin. Cover that in a different show. A lot to unpack there. My point here is that even though some of these companies have not been the most pro crypto, watch them not only hiring these developers, but partnering with some of these fast and highly developed cryptocurrencies. This is why the crypto market, maybe we still have further to go. Maybe we even set new bottoms, but the actual adoption and use case of crypto, it seems like it's still just beginning. This is still early adopters. People sitting here wondering, should I get in at Bitcoin at 22.4? Should I get in at Ethereum at 1500? Should I get in at Cardano at 32 cents, 33 cents? And they're questioning, saying, oh, maybe I'll wait for a little bit lower. In 10 years, when prices of Bitcoin are sitting in the hundreds of thousands and Ethereum sitting at 15 to 20,000 and Cardano sitting at $7 to $12 per coin, you're not going to really care, or you're not going to think about, did you buy at 33 cents or 22 cents or 25 cents or 27 cents, or Ethereum at 1,200 or 1,300 or Bitcoin at 22,000 or 19,000. You're going to think, man, I am so glad I was continuing to bring and build up my portfolio of crypto, because it is taking over the world by storm. Make sure you guys right now, you're continuing to invest in yourself, continue to educate, but keep that DCA strategy up. You guys know here we love trading. We love looking at charts. We love exploring where the resistance support levels are. But the best piece of advice we could give you is continue to invest in yourself, invest in your portfolio, invest in the things you believe in, and watch and wait for the next couple of years as all of that pays off. It is 9:59. We're wrapping up the show for today. It was a fun one. Got a lot of big new things to the show, and you're going to see one more here as we conclude. But Piper, any concluding thoughts you want to leave the fans with before we close out today's stream?
Nope, just I'm happy to be here. I hope that everyone enjoys me being in the show, and I appreciate this partnership with TA Tim and T-Shrew. I'm looking forward to the future with Investing Bros. So this is great. Also, guys, don't forget, check all the links down below. Join the Discord today. There's a free community out there. We also have some higher content and perks if you go silver and gold and Patreon. So check all the links out below. Get in there and do that stuff. And also be watching for me and Tim to be doing some stuff educational wise over on Chart Prime's channel too. And then join that Discord, because there's a lot of things going on, a lot of partnerships, and a bright future ahead for the show and for all the viewers. So
Absolutely. I'm being threatened in chat by Shannon Fowler, good friend of mine. He says I better say hello to him. So hello, Shannon Fowler. Guys, I'm super excited about the future of Investing Bros. As you guys can already see in this episode, we're making some big updates. Look for more content. Look for more videos. Like Army Piper mentioned, watch for us to be appearing a lot more with Chart Prime. Very excited about the partnership we have with them. A phenomenal, if not the best indicator out there that you can be paying for. And when you use our link below, like it's not just, I think it's a great indicator. When you use our link, you get 45% off your first month or your first quarter that you pay for. You do not want to miss out on that. So make sure to subscribe to that. Also, as we kind of talked about throughout this entire stream, join our Discord. If you want to join our Patreon and support the channel here, you can do so. And there's some phenomenal behind the scenes stuff happening. But even if you just sign up for the free version, there are so many cool things we are doing. For example, if you guys have been struggling and trying to realize, man, how can I learn more about charting? How can I learn more about Elliott waves, Fibonacci? We have something coming out this Friday only for our Discord members, and this is for free Discord members and up. We're going to be having an interview with an expert on, he's called Elliott Nachi, an expert on Elliott waves and Fibonacci retracements and extensions. He's going to be doing about an hour-long webinar for our Discord members Friday. Make sure, though, you join our Discord to find out more about that. With that said, though, everybody, we have loved being here. Thank you so much for tuning in here. If you have not already, smash that like button, subscribe to the channel, and we will see you guys tomorrow. Have a great day.